I'm Jeff Whittington with the Whittington team at Compass, and this is your June market update. All right, so June is here, and if you've been following the news at all, you've probably heard bits and pieces about what we're experiencing in today's housing market. Talks of a recession coming, a shift in the market, continued low inventory. There's a lot of chatter out there. So let's break down some of the most important numbers that we track in the industry and give you our assessment of what's really going on out there. Let's start with the median home price. The median home price for the County of San Diego, and this is for detached and attached units, not manufactured homes and mobile homes, is now $875,000. This is a 15.7% change from this time last year and a 0.52% change from last month. That 0.52% change is what we typically see in a balanced market, so that is indicative that we are starting to see a little bit of a shift happening. So let's talk active listings, or the current inventory that we have on the market. We're down 15.3% from last year, which we know and we've been talking about with our decreased inventory levels. We're actually up 2.86% from last month. Again, this is more evidence that we're starting to see a slight shift. The slower appreciation rates, coupled with the increase in the inventory levels, is the trajectory that we typically start to see when that shift is occurring. An interesting component, despite the increase in the inventory, is the number of new listings to hit the market. We're down 20.3% from last year, which we would anticipate, but we're down 6.84% from last month, which is a little bit of a head scratcher. With the inventory levels increasing, you would think that more homes were actually hitting the market, but we actually saw a decrease in the number of homes hitting the market last month. Pending sales, or the homes that are going under contract, are down 22.9% from last year and 0.45% from last month. So not a big change for the number of homes that are going under contract from last month. The number of sold listings were down as well. 21.6% from 2021 and down 9.95%, or nearly 10% from last month. So a marked decrease in the number of homes that actually sold and closed escrow. A stat that I find a bit more interesting is actually the market time. Now, market times have been reported to have been longer, but based on the numbers that we're seeing from this month to last month, they've stayed the same. Right now we're at 17 days for an average market time. And the last comparative stat that we like to look at is the percent of the original list price that a property sells at. So does it sell above or below list price, and at what percentage of that original list price? A year ago, sellers were receiving 104.2% of their asking price as compared to now, which is sitting at 105%. Interestingly, this is down from the 107% that sellers were receiving last year. So when looking at all of these numbers as a whole, what do they mean? Well, there is evidence out there to support some of the chatter about a shifting housing market. We've noted before that these shifts typically take months to play out, but with a slowdown in the appreciation rate, inventory levels coming up slightly, and mortgage interest rates that are still hovering in the low fives, we've got evidence that the scales are starting to tip back to a more balanced market. So sellers, what does this mean for you? Well, if the scales begin to balance out a bit more and we start to see a little more competition on the market, it's going to take a little bit longer to sell your property, and you're unlikely to get the 20 to 30 offers that we've been seeing on properties over this last year. Now, sellers are still getting over 100% of their asking price, so it's still a very strong seller's market despite the shift that we're starting to see, and it's still a great time to sell your property. Buyers, I know it's a little bit unusual to state that it's a good time to buy as well, especially when we just talked about how far the scales have been tipped on that selling side. But we are anticipating that despite any change in the market, whether that be a balancing or a recession, prices are still going to go up. We are anticipating a slower rate of appreciation, but we don't anticipate prices to drop anytime soon, which means if you get in on something now, you're looking to make money and build equity in the near future. If you're waiting for prices to drop, we simply do not see that coming anytime in the near future. There just aren't the inventory levels to support that idea. We'd need to have 4 to 5 times the inventory levels that we have now in order for us to see any marketable shift and something like that to occur. Rates are certainly higher than they were at the beginning of this year, but if you do lock in at the low fives where they're at right now and rates do happen to fall, you can always refinance, and if they do continue to go up, you're going to be happy that you locked in now. So that's it. This is your market update for June. As always, if you have any questions, let us know, and we look forward to bringing you more updates next month.